Good afternoon, everybody, and welcome to this edition of our weekly Broker Moves Review for Thursday, April 1st. No fools over here, just lots of broker moves to get through. We'll do that, of course, after we talk about the Think Markets difference, which is substantial. $8 flat rate trades, your own holder identification number, unlimited phone support, and of course no hidden platform or subscription fees. 4 fantastic reasons to make sure you choose Think Markets for your next ASX share trade. The agenda for today is to check out all the big ratings, upgrades and downgrades, price target increases and decreases from the big brokers on ASX stocks for the last week, and then we'll drill down on 3 stocks of interest. Kicking off with the upgrades, and of course each broker has a system of ratings for each of the stocks they cover. So buy, hold, sell. There are some tricky little ones in between, like underperform and underweight and add and accumulate. But generally what they think they should do, or what their clients should do with that stock over the next 12 to 18 months. And accompanying the rating is usually a price target based upon their valuation, where they think the price can get to. So looking at the list today, these are ratings upgrades. So the rating's getting better. The first one is from Macquarie on Alumina, and they've gone from underperform, which is a fairly bearish sort of rating, to neutral. Of course, that's, as it says, neutral. And they've increased their price target from $1.50 to $1.80. Now, that is a 20% increase in the price target. And at that price target, we're about 4% below where the current share price is. So to target, that means the price could rise about 4% until the broker thinks that the stock is basically fairly valued. So not a lot in it for Alumina from Macquarie, and that reflects that neutral rating, but their view is clearly getting better for the stock, and that was based upon Macquarie's view on aluminium prices. They see them as obviously having improved quite a bit, and that is supportive of Alumina's earnings going forward, and they actually commented that the stock has a pretty good dividend yield as well. The next interesting one there is JP Morgan getting quite bullish on Galaxy Resources, going from a hold to a buy, and a whopping 42% increase in the price target there. And that means there's still about 50% upside in the share price as far as JP Morgan's concerned. I had a look at the chart of that, and this is what's so great about these broker moves. Sometimes they just give you ideas, or alert you to looking at a stock or a chart you haven't looked at for a while, and that Galaxy Resources chart looks very, very interesting indeed. So JP Morgan said that they have seen a recovery in the demand and pricing for lithium chemicals, which is obviously what Galaxy does. They said that the share price had pulled back somewhat, and that means it was giving you an opportunity to get into the sector, and one of their top picks in that sector. JP Morgan also increased the price target for Iluka by about 20%, still about 20% upside in it from here as far as they're concerned. They said that stage 2 of the Eneabba project and stronger mineral sands prices helped out with their valuation, and saw an increase in their expected value of the company by about 25%. So hence the increase in the rating and the price target there. And as is always the case in these presentations, I tell you to press pause and have a read to see if your stock is in that list. We'll try and focus on the bigger moves out there, and certainly a big move down the bottom on Telstra. So Morgan Stanley going from underweight to overweight. That's pretty unusual for a broker to go 2 steps. So in between underweight and overweight is obviously neutral. So for a broker to go 2 steps and increase their price target by 33%, that is very, very impressive. Catching up a little bit because there's only about 17% of upside in it from here. And I shouldn't say only, because that's still a pretty good whack of profits if you can get it over the next 12 to 18 months, of course. But Morgan Stanley seeing some potential benefits flowing through from the proposed Telstra restructuring, saying that there is a greater degree of freedom that the new structures will allow, and the new structures allow each company a greater degree of freedom to go and, chase profits. Having a look at the next list, we've got the downgrade. So not so lucky on this list. We've got AGL going from accumulate at JP Morgan down to a hold. Price target also dropping quite a bit, actually 22%, but still a little bit of upside seen in that one. AGL, coincidentally, actually also announced a demerger of their own. They're going to split into 2 new structures, one which they're going to call New AGL, which is going to house a lot of the infrastructure and green assets And then we've got old AGL, which I think they're going to call Primeco, and that's going to hold all the electricity generation assets and a lot of coal-based assets in there, and I guess you could label that one brown AGL. Market didn't think much of it, though, as we'll see when we get to the stocks of interest, but it is one of our stocks of interest today. And we'd see how JP Morgan reacted to it. Looking down the list, we had UBS responding to some of their changes in their estimates for the iron ore prices on BHP, and you can see a downgrade in the rating from buy to neutral, and also quite a big drop in the price target. And even at that lower price target, they still think BHP is a little overvalued because there's about 7% downside left in it. Then CSR, that was a downgrade, but an increase in the price target, so I don't think you'd stress out too much about that. And then Fortescue, on the basis, again, of those changed iron ore price assumptions. That's a big drop, 28% in the share price, and they still think the stock's overvalued by about 11%, buy to neutral. And Morgan Stanley went to underweight from equal weight on JB Hi-Fi, 11.5% drop in the share price target there, and quite a bit of downside still seen in the share price, nearly 15% from here. Morgan Stanley taking a more cautious approach to the household goods sector in general. They think that some of that panic buying that occurred during the pandemic is probably going to back out in the future, and it's going to make some of the future comparisons for companies like JB Hi-Fi and Harvey Norman a little bit tougher. And heading into the next list, which are the price target increases. So ratings staying the same here, but just a change in the price target. We've done a few of these before. We can see Alumina's in there, for example, from Macquarie, but looking at some of the other bigger moves on this list, JP Morgan on Computershare, about 12% to the upside, but thinking that the company's still overvalued there, an underweight rating reflecting that. Computershare agreed to buy the trust businesses of Wells Fargo last week, so brokers responding to that, but generally price target increases, and it's liked a little bit more at some of the other brokers than JP Morgan. Galaxy Resources, that's a big one there. We've already talked about that. Also, we've talked about Iluka, Karoon Energy at Macquarie, a nice price target increase and plenty of upside. Still seen on that one, a whopping 60%. Macquarie said that they had upgraded their earnings forecast by between sort of 5 and 12% for this financial year and the next on better production forecasts. They also suggested that Karoon Energy, and here's another tip for you, Cenex Energy are their best picks in that small to medium energy sector. Into the next page, looking for the bigger ones there, Mayne Pharma Group. Citigroup expecting that the FDA will approve some of their products in the fourth quarter of FY21. They said that sales should start in the first quarter of FY22 and have a positive impact on earnings in FY23. Looking further down the list, Pilbara Minerals. Once again, JP Morgan, and they have retained a sell but did increase their price target by 36%, which is interesting because that still means it's 28% still overvalued. Make of that what you will. The broker said that they have updated their production profile. They also noted that improvement in lithium demand and pricing that we discussed for Galaxy Resources. But yeah, look, I think the message there is they'd prefer Galaxy over Pilbara. Okay, price target decreases now. Looking at AGL Energy, we've already discussed what drove that, as we did for BHP. Evolution Mining from Macquarie. Macquarie tweaked a bunch of gold stock prices during the week on basically just lower gold price expectations. Fortescue Metals Group, that obviously got caught up in that UBS reassessment of their iron ore prices. We talked about JB Hi-Fi over at Morgan Stanley already. They're all fairly modest declines. And as you can see on the right-hand column, even though there are price declines, most of these are outperforms anyway, so I don't think you'd be too concerned about any of those. We talked about Macquarie's changing views on some of the gold stocks there with Resolute, that price target down 18%. Northern Star also got hit as well, down 13%, but still some upside seen at least in Northern Star. Into that final list of price target decreases, and they're all fairly modest there. And look, outperforms and buys, so once again, I wouldn't be too concerned. We talked earlier on about AGL's proposed demerger, so JP Morgan downgraded their rating from accumulate to hold. They lowered their price target from 14.05 to 11, which is quite a big drop. And in commenting on the demerger, they said that they were concerned about a lack of detail provided with that announcement. They said that challenges remain with respect to the execution of the demerger, and the broker is unsure about the end appeal of the demerged businesses to investors. Not very positive there for AGL. Morgan Stanley, they lowered their price target from 10.68 to 9.28. Again, another sharp drop there. Retained their underweight rating, and they said that after assessing the proposed demerger plan, they continue to see risks facing both of the newly proposed businesses. One, with respect to new AGL's initial offtake agreements, and two, with respect to Primeco's struggling with a lack of appetite from investors due to its insufficient ESG. Now that's its environmental sustainability and its green credentials, and its limited access to funding. So as I said, it's got all of those coal assets or coal-fired power producing assets wrapped into that one. Have a look at more generally what the brokers think about AGL, and they're not very positive on it, with 7 holds but 4 sells. And I think this is the first time since I've started doing these broker moves reviews that I haven't seen a single buy or strong buy for a stock. Usually somebody can find the value within a company, but not the case for poor old AGL. And I think that is really reflected in this horrific looking chart. It's just a consistent, one of the most consistent downtrends I think I've ever seen. Every time we get close to anything that even resembles a rally, we get beaten back down again. Having said that, there are, if you really, really squint, there's the tiniest glimpse of hope here that maybe the short term can change. We've gone to sort of an indiscriminate short term trend instead of a clear cut down one. But, I wouldn't be getting my hopes up if I was an AGL shareholder. And if you are an AGL shareholder, you kind of have to ask yourself why. The fundamentals aren't horrific with a PE of about 11, but as you can see, there's no growth that we can see in the business from that reading there. Hey, the dividend yield is fantastic. You can't doubt that. And on some of the other measures, in particular, enterprise value to revenue and price to free cash flow, it's actually looking really, really cheap. But until that chart turns around, until we see some high peaks and high troughs, until we see it interact with this long-term downtrend channel, really, I think you just have to stay away from that one. We talked earlier on about this change in UBS's view on the iron ore prices. We can see how they've responded to BHP Group, going from buy to neutral, also lowering their price target from $50 to $42. We talked about how they responded to Fortescue, going from buy to neutral there, and from 25 to 18. So really, really big drops in those two target prices and, of course, ratings downgrades. Macquarie also, interestingly, came out and reassessed their views of iron ore prices and actually upgraded them. So they had price target increases on BHP from 55 to 57, and then on Fortescue, they actually dropped that price target as well, didn't they? So from 25.50 to 23, and then from Rio Tinto, they tweaked that down a little bit. So some winners and losers there. I'll let you press pause and read the comments. But look, let's just take that as some mixed views on the iron ore sector, and that's contrasting what we saw, and I've covered Fortescue a number of times in these sessions, and it has increasingly gone from a buy-heavy recommendation stock to more of a holding stock, and there's even a sell in there now. And I guess it's just reflecting some of the conflicted views that brokers have on the stock. So I guess when you want to get them is sort of earlier on in the piece, when brokers were really very, very positive to it. In terms of the chart, it doesn't look terrible. I mean, certainly there is a short-term downtrend in place, but that doesn't mean that it's a clear-cut sell from here. Whilst the long-term trend is still in place, and that is definitely the case, I'd still be happy to be a holder of Fortescue. In fact, if we can come in here and start to make high peaks and high troughs, I'd actually be happy to buy it, because I think you're getting a little bit of a discount from those highs there. So it really is quite crucial at this point, if you're a Fortescue shareholder, to watch what happens to that developing trend. It is not uncommon for the long-term trend to be tested and held. And I do think that's the most likely scenario here. I'm a believer in the longer for stronger theory on these metals miners, because, just last night we had President Biden come out with a $2.6 trillion infrastructure program, and you're going to need, steel to build bridges, which is one of the things they pointed out that they're going to do. So yeah, look, it's at a critical juncture and we'll keep an eye on it. In terms of the fundamentals, the PE is crazy low because they're making so much money right now, but it is not expected to stay low. So, most brokers are expecting that the profits will decline from this financial year to the next because prices will eventually have to settle down and that'll cause a bit of a decrease in the profits. But at a PE of 8, it's still crazy cheap. And with a dividend yield of 15%, and even if it is only 9% next year, I still think that's fantastic. So it's a couple of really good reasons. And the return on equity is exemplary. And even at 34% for next financial year, I still think that's fantastic. So look, this is a major tick for me. I'm going to give this an A+. This is, look, it's a sad face, isn't it? Because I wish the brokers were more positive on this one, and this is a bit of a question mark here, borderline on a tick. So the fundamentals are good. Let's just wait for the technicals to turn around, and then Fortescue will once again become a buy, in my opinion. In the meantime, make of my analysis what you will. And the final stock of interest today is Santos. JP Morgan raised their price target from $7.50 to $7.95. Macquarie went from $7.50 to $7.75, and UBS from $8.20 to $8.35. So all three brokers positive on this one. And what happened during the week was the company green-lighted their Barossa gas and LNG project. This is a really long-term project that they've undertaken. It's going to take quite a bit of money to get it to the point where it's producing, but it is a very important deal for the company. It will shore up their production for, order of magnitude the next 20 years. And I think that's even mentioned in here by JP Morgan, where they say, look, it is a really important one to sustain and underpin the company's production for the next 2 decades. The asset sell down to fund the project reduces some balance sheet impact. But look, overall, they're very positive on this decision. Net positive there. Short to medium term EPS impact is very little because, as I said, it's a long-term project, but long-term upside from Macquarie. UBS is the most bullish by far. They retained their buy rating. They're pleased with the announcement that the project will go ahead and that the company remains the broker's preferred pick in the energy sector. And whilst this is a longer term project, there will be some near term growth coming through from a couple of their other operations. Having a look at what the brokers think more generally, this is more like what we like to see. This is what Fortescue looked like, about sort of 12 months ago. And we've got 2 strong buys, 6 buys, 5 holds, just the one sell out there. There's always a wowzer around. The mean target, I didn't mention that on the last 2, but go back in the presentation and see what those mean targets were. For Santos anyway, it's around about 7.72, but with these price targeting upgrades, that will probably increase a little, so a little bit of upside there. In terms of the fundamentals, the PE is not terrible by any stretch of the imagination, and there is some growth in the business, which means that it's coming down. The price to free cash flow is very good. Return on equity is quite impressive. And whilst that one's not fantastic, I'm happy to give this a very solid B+ here. So we'll go tick there, and I think the chart looks pretty good. We've got a long-term uptrend in place. It is caught in this trading range between sort of $7 and $8. I would like to see it sort of turn a little bit higher before I had enough confidence to buy it if I didn't have it. If I did have it though, I'm certainly a holder here. But look, in the meantime, let me give it 3 ticks. Well, that's it for today's presentation. You can catch all of our other market news updates, that is news, views and opinions, in our market news section of the website. You can follow me or the Think Market handles if you like on Twitter. We do have some webinars upcoming, and you do need to go to the webinars section of the website to register for those. Our 3 series webinars, that is this time the top 3 ASX turnaround stocks, and I wonder if AGL is going to be in that group. And then that's the 21st of April, and then on the 28th of April, we've got Ask the Experts, and that's where you get to bring your portfolio to the table and ask me for some analysis. And then Wednesday, 5th of May, I think this one's pretty timely, a fundamental analysis refresher. So when I talk about all of those fandangled earnings ratios, you'll know exactly what I'm talking about. The disclaimer before I leave you today for our Easter long weekend and says that everything we've discussed today is general advice. We are a regulated Australian broker, and that means we do have some products that could see you lose more than your deposits. So make sure you read this disclaimer carefully, or if you have any questions at all, please give us a call. Please have a very happy and very safe Easter long weekend, everyone. All the best for your trading. Until we catch up again, bye-bye for now.